What if every dollar you spent, every coffee you bought, every donation you made, was recorded, analyzed, and could be used to profile you? That's not a distant dystopian fantasy. It's a real risk with the rise of digital currencies, especially ones issued by governments known as Central Bank Digital Currencies or CBDCs. Let's start with privacy. Cash is simple, hand it over and the transaction leaves little to no trace. But with digital currencies, every payment creates a permanent trackable record. Unlike cash, there's no anonymity. Authorities could monitor, store, and analyze your entire financial life. Imagine a government or even a big institution with access to every transaction you make. In the wrong hands, this could be used to target activists, silence dissent, or punish unpopular opinions. Even in countries that value freedom, the temptation to surveil or control financial behavior is always there. Next, let's talk about control. CBDCs are fundamentally different from cryptocurrencies like Bitcoin. They're issued and managed by central banks or governments, not by a distributed network. With that comes the power to dictate how, when, and where you can spend your money. Imagine programmable money, funds that expire if you don't use them fast enough or can only be spent on certain things. That's financial censorship, pure and simple. If you hold views that aren't in line with those in power, your digital wallet could be limited or even frozen. That's a direct threat to the freedom we often take for granted in everyday commerce. Cybersecurity is another huge concern. Digital currencies depend on secure technology, but no system is invulnerable. Hackers, cybercriminals, or even hostile nations could target a country's digital currency infrastructure. One major breach could erase savings, disrupt economies, and shake public trust to its core. And with quantum computing on the horizon, the cryptography that keeps some currencies safe today might not be enough tomorrow. Physical cash, you can't hack it from the other side of the world. Now think about the ripple effect on the economy. If people start using CBDCs directly from central banks, traditional banks could be sidelined. That might sound efficient, but it could actually starve local banks of funds, making it harder for families and businesses to get loans. The result? Slower growth, less innovation, and potentially even financial crises. On the flip side, decentralized cryptocurrencies are known for wild price swings. If adopted on a massive scale without guardrails, they could spark bubbles, wipe out fortunes, and unsettle entire economies. Finally, let's not forget the global picture. Nations are racing to launch their own digital currencies, and that's shifting power on the world stage. Countries with strong surveillance tools could link digital money to social credit systems or clamp down on international transactions. The digital yuan, for example, lets the Chinese government set the rules for anyone using it, even foreigners. This isn't just about finance anymore. It's about economic influence, coercion, and potentially new kinds of conflict. So yes, digital currency could bring speed, innovation, even inclusion. But it also brings real risks: lost privacy, expanded surveillance, financial censorship, cyber threats, economic disruption, and global tension. If digital money is the future, it's up to all of us to demand robust oversight and safeguards that protect freedom, security, and democracy. Because the cost of getting this wrong isn't just technical, it's personal and it's profound.